down is expected to be about 8.5%. That's in line with the average swing that we've seen over the last 12 quarters, but the company is much bigger than it's ever been. It's $3.5 trillion. So a swing of that magnitude is almost $300 billion, which is more than almost every publicly traded company's market cap. So we are basically looking at a situation where the biggest, most loved, most celebrated, most well-regarded stock in the entire market is coming out with an earnings report that yet again they guided higher going into. Analysts are now looking for $33.28 billion, which was a guide up from last quarter, 70 cents in earnings per share. That equates to 84% year-over-year revenue growth and 89% earnings per share growth. So my comment here would be, yes, we all hope for the best, but let's all be very honest with each other. A company at $33 billion in revenue, being able to do 84% growth on that and then telling you they're going to do it again next time is very low. I think the tightrope that NVIDIA now has to walk is to remain optimistic about the future, but not continue to push out those expectations and give people the impression that year-over-year sales doubling for a $3 trillion company is in any way realistic as far as expectations. I think they get it. I think there's a way to do that. I think there's a way to give guidance, sound optimistic, but not keep painting yourself into a corner of people looking for doubles every time you report. We'll see if they can pull it off. That's what I'm watching for.
Yeah.
John, welcome to you. Let's start with what could kind of constrain the growth story. What do you see?
Yeah, I think they're going to report very strong earnings, but I think there's going to be some limits in terms of how much upside they're going to be able to post on the guidance. I think there's a number of factors there. With their current generation Hopper GPU, we think there are constraints in the China market. China is really pushing the hyperscalers in the China market to use more domestic solutions. There is a China compliant SKU, the H20 in that market, that's probably going to get pushed out a little bit in Q4. Customers obviously are transitioning to Blackwell. Blackwell is their next generation GPU. It's ramping right now. So some of these customers are opting to push out their orders for Hopper in exchange for Blackwell. And then lastly, from a supply chain perspective, we think NVIDIA recently made a decision to switch their power management IC vendors. And I think that's creating some near-term bottlenecks from a supply issue, which could limit how many of these new GB200 NVL server racks they could ship in Q4.
So I'm trying to figure out whether we should really game out what could happen with earnings, John, from your point of view, or whether we should look longer term, ignore the noise of this week, and try to figure out where this stock's going to be in 6 months' time.
Yeah, I believe that most investors should look through some of the near-term noise here related to earnings. I think NVIDIA still remains extremely well-positioned to grow outsized earnings next year. Our numbers for 2025 are well above consensus. Blackwell represents a pretty significant upgrade cycle because they're going to be shipping much higher ASP server rack solutions versus simply shipping GPU cards.
And I'm seeing here those figures that you're referencing. So again, there are your price targets, 180 on NVIDIA right now.
Speaking of great fundamental companies, Jim, what about tech? I mean, those are the names that got us to these all-time highs. Are they going to continue to take us there? We got NVIDIA coming out tomorrow.
Well, okay, so let's talk about NVIDIA. I want to give a hat tip to Josh, who's, the one I think of all of us who's been in it the longest, maybe you too, Jason. But look, the report is likely to be very good tomorrow. There's no reason to think it will be otherwise when you look at what the hyperscalers are talking about, CapEx, and basically every news item is people can't get enough of the chips. As far as the short-term price action, I would say really don't pay attention to it. A lot of this has to do with short-dated options that are people putting on to play the pop, presumably after earnings happen, and then they sell the calls, and that makes the stock go down. So don't be worried about the short-term action. Regarding tech in general, I think for the same reasons that we've all been talking about earlier in the show, people are going to be loath to sell these going into year-end. Again, you don't want to take a taxable gain, and if you're indexed or in some way benchmarked, you're not going to want to take the risk of falling behind the benchmark. By the way, and I just want to tie this into what Josh was saying a second ago, when you talk about bottom fishing and why it's really a bad idea right now, is because the opposite of what I just said applies. The things that have gotten decimated this year are likely to be tax loss candidates. They're likely to get bear mauled in December. That's not where you want to be shopping right now.
Here on the demand pipeline front.
Oh, I think the demand's going to be very, very bullish. And that's no surprise, Brad. You think about all of the other companies or customers in this AI GPU supply chain have been raising their CapEx guide, have been very bullish about their own demand. And so I think that is not in question that we will have a very bullish demand picture. And that's why I think, Brad, that if we do have a short-term manufacturing glitch, because nobody else is as close as they are to making these chips, you buy it because the demand is there and they'll fix their problems.
But it's interesting, we've still seen 6 quarters of growth deceleration in the stock, Paul. At what point is there something that stops the momentum for Nvidia? Is it that lack of further growth as a catalyst, or is it something potentially more insidious like a competitor coming in?
You know, I don't think it's really going to be a competitor. I do expect AMD to get its act together and be a viable second source, but it's also interesting that in the last couple of days, AMD announced that they're firing 1,000 people, which is pretty large, 4% of the global workforce. So we do know that that company's problems are more CPU related, but still, I don't think that they're going to close the gap. So it'll be a big market. AMD will have a slice of that pie. NVIDIA will continue to have the biggest slice of the pie. And what would happen is, and the greatest tell would be, when you start to get the capital expenditure budgets from the hyperscalers, the guys that are building these big data centers, and they start to rein in their CapEx. In the last couple of quarters, they've been increasing their CapEx. That'll be the tell to look for.
Jason, I know you've owned Nvidia. Jim just said you might have been in it the longest. What do you make ahead of the print? Is it too late for someone that hasn't gotten in at the price action that we're seeing now?
I don't think so.
Okay.
I think the question is obviously is how sustainable is this ongoing AI compute demand? How sustainable it is going forward? Yes, the stock's up 189% year to date. We're expecting about $33 billion worth of revenue. We probably will surpass that somewhat. I think in the next quarter, however, when you really start to see Blackwell come through, that will be the bang out quarter, which is the quarter that we're working through right now, which we potentially see $38 billion worth of revenue. So I continue to like this story. We hear from the hyperscalers and all the CapEx spend that's going in this space that obviously NVIDIA continues to capture. There's not a lot of competition for them currently. So I continue to like the stock, and I think that, you know, maybe you're not buying it right here, but there will be opportunities that present themselves. We've seen how this stock has traded over the last few quarters.
Josh, what are you waiting for ahead of Nvidia as an owner of this name as well?
There's a report out there that the implied swing for Nvidia up or...
Jason, I know you've owned Nvidia. Jim just said you might have been in it the longest. What do you make ahead of the print? Is it too late for someone that hasn't gotten in at the price action that we're seeing now?
I don't think so.
Okay.
I think the question is obviously is how sustainable is this ongoing AI compute demand? How sustainable it is going forward? Yes, the stock's up 189% year to date. We're expecting about $33 billion worth of revenue. We probably will surpass that somewhat. I think in the next quarter, however, when you really start to see Blackwell come through, that will be the bang out quarter, which is the quarter that we're working through right now, which we potentially see $38 billion worth of revenue. So I continue to like this story. We hear from the hyperscalers and all the CapEx spend that's going in this space that obviously NVIDIA continues to capture. There's not a lot of competition for them currently. So I continue to like the stock, and I think that, you know, maybe you're not buying it right here, but there will be opportunities that present themselves. We've seen how this stock has traded over the last few quarters.
Josh, what are you waiting for ahead of Nvidia as an owner of this name as well?
There's a report out there that the implied swing for Nvidia up or...
Great to chat with you here. What are you expecting heading into this earnings print? Is the current pressure on Nvidia's stock something that sets them up better for a pop after those results?
Yeah, I think they're going to have a nice beat, but here's the problem, Madison, and I got this data from the analysis tab on Yahoo Finance. 4 quarters ago, the company beat the street's EPS estimate by 19%. Next quarter is 11% beat. Then it goes down to a 10% beat. And then the last quarter was, quote unquote, only a 6% beat. So a lot is expected of Nvidia, and they're going to have to beat the estimates by even more. Let's get back to a double-digit percentage increase beat. And then I think people will feel more comfortable. In the meantime, today's issue about potential overheating and the Blackwell chip, it's obviously not a positive. We also don't know it to be true. And you may recall a couple weeks or months ago, there were similar kind of manufacturing glitch issues, and that actually brought a good opportunity to buy the shares. Right. And so if this stock backs down to the 50-day moving average price of about 130, I'd probably buy it with both hands. As to the quarter they're going to announce Wednesday evening, I think it's going to be great. But as I said before, it's got to be a bigger beat than they have been beating the last few quarters. I need to see that. In the meantime, I have a third of my portfolio in this stock, and I feel good about that.
This earnings, what do you think? What are we looking for?
Yeah, I think it's going to be obviously incredibly impactful. That's an understatement. I also think it's kind of a real heavyweight fight, Oliver, unlike the one we saw Friday. Right. On one corner, you've got macro, higher interest rates than we all thought we'd have right now. It's got the semiconductor Philadelphia index down 9% the last month. And on the other side, you've got micro. You've got this powerful juggernaut Nvidia. What's it going to do? The last 8 quarters, it's handily beat guidance. Those estimates or those year-over-year comps are getting harder and harder. The last quarter, even though they beat, the stock was down 5%. So this one, you're still looking at this, 31.7 guided from management for billions of revenue for Q3. The street's, caught up and understands the game for management. They're estimating 33.1. So, I expect them to beat. How much is the question, and that'll kind of drive the stock's, stock action.
Point would we be able to tell, and investors out there really be able to discern when NVIDIA's shifted from a valuation front-running position to then growing into a valuation, and how does that kind of show up in some of the metrics that we hear on a quarterly basis, at least at this juncture?
Yeah, well, what I tell you, Brad, is I know most people say, okay, the stock tripled last year. It's working on a triple this year, so it must be overvalued. But if you take a look at it, it's trading at 30 some odd times next year's earnings, and that's probably a relevant growth rate for the next couple of years. So it's trading at about PEG parity. I actually look for stocks trading at that range as tech values, or at least relative values. So I don't think we have a problem with valuation. I actually think valuation can expand. But again, it's all going to be about, oh my goodness, the hyperscalers have reined in their capital expenditure budgets, and that's going to back into less demand for NVIDIA's GPUs.